Good day. Today we are going to focus on the accounting equation. So we are going to be doing the April 2021 Common Test KZN. You are provided with the information relating to Sobota Traders, a business owned by Mtogo Pere for the month of March 2021. So then analyze the following transaction according to the columns provided. Assume the bank is favorable at all times. So when they are saying that the bank is favorable at all times, it means that the bank has a debit balance, so we are regarding it as an asset. But if they are saying that the bank has an unfavorable balance, so that bank is a bank overdraft. It's a bank overdraft. So it has a credit balance. So it's a liability. Okay, so in this case, it's favorable, meaning that it's an asset. Okay, so now let's continue. So let's go to the transactions. Transaction number 1. Purchase the following items from Sekamise Traders via EFT. So whenever we are buying, so we need to ask ourselves, when we are purchasing, what is going to happen to our bank? When we are buying, what is going to happen to our bank? Obviously, the bank has to decrease. When we are buying, the bank has to decrease. So let's go to the So it is number 1. We are buying, we are purchasing via the EFT. So it means that the money that we have in the bank is going to decrease. And the bank is an asset. So the asset, it decreases on the credit side. So that is why here they are already on the credit side to show that the bank is decreasing. Right? Now, what are we buying? So we are buying the trading stock, so which is 11,240. So the trading stock is an asset, right? So when we are buying the trading stock has to increase, and it increases on the debit side, trading stock. So it's how much? 11,240. So trading stock is increasing, the assets are increasing, the bank is an asset and it is decreasing. So it's going to be a plus and minus. Then there's no owner's equity, there's no liability. Okay, so let's continue. Bullet number 2. Stationery for the owner's son. So we bought a stationery for the owner's son. So it's how much? It is 1,000. So if we bought a stationery, but listen, this one is for the owner's son, meaning that the expense of the business, which is a stationery, is not going to be affected. The account that is going to be affected, it is going to be the drawing, because this is for the personal. Now we come here. The bank is credited and it's an asset, so there must be a minus sign. Then the drawing is an owner's equity, and the drawings, they decreases the owner's equity. So now let's go to number 2. Goods sold for cash. So we sold for cash. Right? So when we are selling for cash, what is going to happen to the bank? Obviously, the bank is going to increase, and the bank increases on the debit side. So it's a cash register tape. The cost price for these goods was 8,000. Now, when we are selling the goods, for cash, 4 accounts are going to be affected. The first two is the bank and the sales, because the bank increases with the selling price. And then the last two, it is going to be the cost of sales and the trading stock. So it becomes like this. So let's start with the first two. Okay, so when we are selling, the bank is supposed to increase, and it is supposed to increase on the debit side, right? Then the account that is going to be credited, it is going to be what? It is going to be the sales, because the incomes, they are increasing as we are selling. So how much is the selling price? So the selling price is not given here. We are only given the cost price, right? Now let's come to the cost of sales and trading stock. So when we are selling the goods, what is going to happen to the trading stock, to the goods that we have? Obviously, they're going to decrease. And the trading stock is an asset. They decrease on the credit side. So it is going to be credited, the trading stock. And then the cost of sales, the cost of goods being sold, it is increasing as it is an expense. So the expense increase on the debit side. So the trading stock is an asset, it is decreasing. So we come to the asset and put a minus sign. Cost of sales, it's an expense. So the expenses, they decreases the owner's equity. Now, for the sales, we are not given the selling price, right? So let's come and calculate. They said the cost price, the markup on cost price was 75%. So what you need to know is that cost price plus markup is equal to selling price, right? And then the markup here is 75%. The cost price is 100. So now the selling price here is going to be 175, right? So now we can find the selling price, because we do have the cost price as 8,000, right? Multiplied by. So it is going to be 8,000 multiplied by. So below we're going to put what we have. Okay, so we're going to say 8,000 multiplied by. So below we're going to put what we don't have. So what we don't have is a selling price, which is 175%. And then below we are going to put what we have. So what we have is a cost price, which is 100%. So this is going to give you how much? Let's calculate. 8,000 multiplied by 175 divided by 100. That is going to be 14,000. So the selling price here is going to be 14,000. So let's go and record it. So it is 14,000. Right? The bank is debited and the bank is an asset. So meaning that we're going to go to the asset and put a plus sign to show that the assets are positive. Then the sales, they are credited. Remember, the sales is an income, and the incomes, they increases the owner's equity. Then we have no liability. Number 3, made an EFT payment for water and electricity. So we paid using an EFT. So if we paid, what is going to happen to the bank? The bank is going to be credited because we are making a payment. Alright? The bank is going to be credited. Now, what are we making a payment for? We are making a payment for the water and electricity. So it means that the expense of the water and electricity is increasing. And the expense increases on the debit side. Water and electricity. How much are they? 850. So we come here to the amount and put 850. right? Now, the bank is an asset and it is credited, meaning that the assets are decreasing. And then water and electricity is an expense account. So the expense account, they decreases the owner's equity, so we put a minus sign. So there's no liability. Number 4, the owner increased his capital contribution by transferring 75,000 from his personal account into the business current account. So the owner transferred the money into the business account. So meaning that the bank is increasing because we are receiving money. So the bank increases on the debit side. So now because the owner transferred his own money into the business account, we call that a capital, which is the owner's equity. Now, how much is it? We said it is 75,000. 75,000. So the bank is increasing and it's an asset, meaning that under asset we are going to put a plus sign to show that the bank is positive. Then the capital is an owner's equity, and the owner's equity, they increase on the credit side. So meaning that we're going to come on the credit side and increase the owner's equity with the plus sign. Number 5, the business received a loan from Absa Bank for 60,000, right? So we receive a loan. The loan is repayable after 3 years. So meaning that you are going to pay this loan after 3 years. But then what is important is that we received a loan. So if we received a loan, it means that the money in our bank is increasing because we have received a loan, right? And then, so it means that the bank is increasing and the bank increases on the debit side. And then the loan is also increasing because it means that now we are owing the money into the bank for the loan. Now remember, the loan is a liability and the liability increase on the credit side. So that is why we're going to put the loan on the credit side. So it's how much? 60,000. So the bank is debited and it's an asset, meaning that you're going to put the plus sign under asset. Then the loan. The loan is a liability. So, and it is increasing. So we're going to go to the liability and increase them with the plus sign. Then we don't have the owner's equity. So now, number 6, the bank made an EFT transfer of 24,000 for the fixed deposit that has matured on 31 March 2021. Right? Remember the month that you are in right now, it is March. So the deposit has matured. Right? The deposit has matured. So it means that the business is receiving this fixed deposit back into the business. So that is why the bank is debited, because we are receiving this fixed deposit back into the business because it has now matured. So it means that the fixed deposit is going to decrease because now it has matured, so now it is leaving the fixed deposit account. So how much is it? 24,000. So the bank is an asset and it is debited, meaning that you're going to put a plus sign under asset. Then the fixed deposit, it is credited and it's an asset, meaning that we are going to put a plus and a minus sign. Then we don't have the owner's equity, we don't have the liabilities. So this is your accounting equation.